Good afternoon, everyone. Thank you for taking out time this Friday afternoon. Today, we'll be talking about a very interesting topic, which is, of course, towards the investments, towards the fixed income portfolio, which aligns to modern portfolio strategies. Where should you invest next? Today, I'd just like to first introduce you to our leadership team. Mr. Shiv Parekh, who's the founder and CEO of HPITS. He's a MBA from Harvard's Business School and alumni to Stanford University. Forbes 30 under 30, 2022. Business World Disrupt 30 under 30, 2022. Along with this, we have Mr. Sameer Bhandari, our co-founder and CFO, who is part of this webinar. Just like to give you an introduction to him. Well, he's a batch 19, chartered accountant batch 1987. I'm I'm Ahmedabad batch 1989. From 89 to 96, he was with Bank of America, based out of Mumbai. Then he was shuttling between Hong Kong and Mumbai. 96, he joined UBS Singapore. From 96 to 99, he was in UBS Singapore as a managing director, as you can see it on the screen. 99 till 2008, he was working with JP Morgan, of course, in Singapore. Uh, 2008, he moved to Lehman Brothers. And Sameer, I will have a question. One of Lehman Brothers shift to Nomura. How was it? And I guess I've never asked you this question in any of the earlier webinars, but today I'm just going to ask you that question. Well, he joined in June 2008 in Lehman Brothers, and we know what happened. And that's the experience we come to know today. And it was further picked up by Nomura Securities. And guess what? It was his biggest stint. June 2008 till December 2021, right? And that was him. He was actually co-heading sales globally into fixed income, equity, part of the global exec, which is a very big thing. Managed almost all asset classes, and background being so diverse, we'll come to know. And rather, I'll start off with one particular question. Uh, Moment we start this. So a bit about myself, overall 25 years experience, worked with banks like HDFC, HSBC, DBS Singapore Kotak. Indeed, I was one of the first employees at HPITS. Uh, Sameer sir joined us at around 3 years back to accelerate growth and sales at HPITS. So Sameer sir, I have one question to start off. You need two
Sure.
questions, which might you can just answer in parts. Is, of course, how was your experience in regards to this, which people like to know in terms to, because it was basically a mortgage backed security MBS, and it was part of some kind of a fixed income that time. And now we see globally that there is a trend of Fed rate cuts or global interest rate markets, how it's shaping up to India, right? And you can as well talk about, the latest deal about AI, which is in the current scenario, one of the topics to talk about.
No, sure. Thank you, Abhimanyu, and welcome everyone today to this webinar. So let me talk to you to start with a bit about my experience. So when I left JP Morgan, I joined Lehman Brothers. And as you all know, in September 2008, we had a massive crisis, and we saw Lehman actually collapse. Um, so it was obviously very traumatic for me. I'll be very honest. I left a very good career in JP Morgan, where I'd worked for 9 years, and joining this firm, Lehman Brothers, where I thought obviously we'll be doing extremely well. And then to obviously be in an organization which then collapses in 3 months' time. And this was pure mismanagement by Lehman Brothers. Obviously, they had taken a lot of leverage. They had invested a lot in mortgage-backed securities, collateralized CDOs and CLOs, and which, as we all know, collapsed. And that was, I would say, one of the biggest financial crises we've seen, I would say, in the history of banking. But things obviously worked out well for me. Within 2 weeks, Nomura came and took over the Lehman people, especially in Asia. And I moved to Nomura, where I then ran sales globally across fixed income and equities for almost 12 to 13 years. So having had that experience, And as Abhimanyu mentioned, I just wanted to talk a bit about interest rates, talk a bit about AI, talk about what's happening in the US. Before I pass it on to Abhimanyu to talk about India, what's happening around the REITs and the SM REIT space. So, what we are seeing in the US is the jobs data which is coming out has not been very good. Inflation obviously has come off, and the last inflation read was around 2.9%. But the jobs data is the most concerning. Jobless claims have been going up. People are not able to get jobs very, very easily. And that's one of the reasons when Fed had their meeting, they cut rates by 25 basis points. I expect the US Fed for the rest of 26, they will have two meetings. I expect them to cut another 50 basis points. And next year, uh, I personally think they will cut at least three times, if not four times. So we had the Fed funds today at four and a quarter. This year, it will probably go down to 375. And next year, I think the Fed funds will be below 3%. So I would say between 275 and 3%. And what typically happens is most of the central banks do follow and take the cue from the Fed. If the Fed starts cutting rates, I'm very confident RBI will also cut rates. So I expect RBI to cut rates at least thrice over the next 12 to 15 months. And I expect the rates to come down by 75 basis points. So that's a bit of context around what's happening on interest rates. So rates are definitely coming down. In the US, as I mentioned, they'll come down by 150 to 175 basis points. In India, they will probably come down between 75 and 100 basis points. Around the AI space, obviously, it's very, very interesting. People who follow the US markets have seen the stocks which are anything related to AI have been going up. AI obviously has been solving a lot of problems. The productivity is going up. I mean, you use Grok, you use Chat GPT, you use Llama. The results are just spectacular. So obviously, productivity has been going up. It's actually helping a lot of companies reduce their overall costs, which is also adding to pressure around jobs, right? Jobs are also coming off. But I do feel AI is here to stay. I think the investment in AI will only increase over the next 2 years. All the mega tech companies are putting a lot of money into AI. In fact, in India, I was just seeing the news that TCS is expected to invest $1 billion around AI space. So this is here to stay. AI infrastructure companies are going to continue to do well. Chat GPT or OpenAI, which is the company, just got valued at $500 billion, and this is a company which is 3 years old. So you can imagine what's really happening. But it's very exciting times. I think it helps overall economy. I think it helps overall revenues for companies. And please watch this space. I think this space is going to be extremely interesting. So now let me pass it on to Abhimanyu to talk around the Indian piece and how SM REITs, which is a new asset class which we are bringing to the market, how it actually compares to some of the other fixed income portfolio. Over to you, Abhimanyu.
Thank you, Samir. Yes, FDs and bonds are one of the traditional comparison to what we can look at the fixed income as compared to SM REITs. Well, the fluctuation in interest rates and inflation rates have actually redefined what safe actually means. And we'll surely talk about between FDs and bonds and SM REITs, how the fluctuations or the returns are looking like. Because investors today are seeking predictable returns plus real estate backing. And this is the kind of product which has come into picture and it will give a different kind of a lookout. Well, let's talk about FDs first of all. And we know that FD is known to each and every uh, Indian. We're fond of parking money as to start when we can career. So average returns in FDs been always basically between 6 to 7%, though it's taxed as income. It's ideal for liquidity, but not wealth creation, as we all know. It's low flexibility, early withdrawals, there are penalties. Well, these are certain pros and cons which we can talk about. stable, low risk, easy to open, assured liquidity, suitable for short-term goals, and of course, it is RBI regulated. In terms to cons, which we all know, and that's why we tend to go to other asset classes, it's got low returns. It's taxed as income, penalty on early withdrawal, and no capital appreciation, as the principal remains same till the end of maturity. And of course, limited wealth creation. You can always think of some kind of wealth creation, but not as equivalent to what you are looking as your goal. Bonds, if I have to talk about, is a step ahead of FDs, but has limited accessibilities. They generally talk about between 7 to 9%. So it's a bit higher in comparison to FDs, which are basically government bonds, government securities, corporate bonds. And they are but market linked, sensitive to rate changes as we see it as of now, what's happening. And the minimum ticket size often high for retail investors. Well, again, in bonds, if we look at the returns, the pros and cons, which we just compared for FDs, high returns than FDs, yes, but are they actually creating wealth creation? That one should decide as per their objective and goals. Diverse options, government, corporate, and tax-free bonds. Periodic income can beat inflation, depends on the kind of a time sensitivity when you look at the interest rate cuts. SEBI regulated, of course, it's got a, they are listed. But when we look at the cons, there's an interest rate risk, as we talked about, touch point. Limited liquidity, default risk is there because corporate bonds carry credit risk. Complexity, why? Because it requires understanding of yields, maturity, and ratings. I'll just touch point over here with a kind of a meeting I was having with one of my clients a couple of days back. So he's a person, he used to read interest rate charts, right? And he saw that cycle of interest rates going up and down. So there was a time back in 2010 when the interest rate touched 9%, came down. Then it went to again to 9, it came down. And this one, which we're talking about, this cycle, it don't go beyond 8%. So it's touched 8% and now it's going down. So he foresees that it can as well touch as low as 4%. But let's see how it looks like. So these are some kind of a risk which it carries. SM REITs, which is basically the new asset class, why it is a kind of a smart way of investing for the future. The closest competition, or I should say, closest comparison to this could be FDs or bonds. It gives you regular rental payouts quarterly plus capital appreciation. Automatically, your IRR increases. It's of course semi-regulated and by and it is only into income generating A grade commercial assets. They are transparent in nature, audited, and institutionally managed. Well, overall holistic view, we can just see what the comparison looks like. We talked about average return 6 to 7, FDs 7 to 9. Over here in SM REITs, we're talking about 8% tax free, paid out quarterly, plus capital appreciation, which mostly looks like 13 to 17% IRR. Liquidity, medium, high. Risk, low, moderate. Asset backing, none. In bonds, it is partial. In SM, it's 100% completed and income generating commercial real estate. We cannot touch the under construction asset over here. Uh, let's talk about payout frequency. FDs annual. Why annual, which we have touched point on? You can of course do semi-annual, but the maximum returns which we are talking about in that particular perspective. Bond semi-annual, and of course in SM REIT, which is quarterly and can be looked out in few coming years or couple of years, where the payouts could be done monthly. Regulated by RBI, bonds by SEBI, and of course SM REITs by SEBI. Tax treatment, FDs are fully taxable, bonds dependent on bond type, and in SM REITs it is rental is tax free. Well, why investors are moving to investor REITs? And of course, that kind of a comparison would have surely given you some kind of a cue because it is backed by a commercial real estate asset. If we talk about currently, the commercial real estate asset is at a stage where the property price are looking how to go up. So it's a right time to invest. Professionally managed by AMC. It's a diversified risk. India, as a country, we love to invest in properties. And we know the residential part has always been giving 2 to 3%. And now we know and we become smart. So this is the chance we get into investing into commercial real estate assets, which is actually managed professionally and gives you a highest bet returns in terms of it. And guess what? It comes with good liquidity as well. Hence, diversified risk, not dependent on one tenant on property. Ideal for HNI and retail investors seeking steady fixed income alternative like professionals, retirees, entrepreneurs. Well, redefining commercial real estate with semi-regulated SM REIT platform by at HBITS, as we already mentioned, we are democratizing access to commercial real estate assets. We have done approximately 500 crores investing experience in erstwhile in fraction ownership. 50,000 crores of assets were evaluated once we got into this portfolio experience. There are approximately 125,000 registered users and around 1,400 active investors with us. Of course, the access is very clean, transparent. This is just a small case study to put across that since the minimum ticket size in SM REITs is going to be 10 lakhs, what do you kind of return, what you can look at? Well, quarterly rental yield is approximately 8% per annum, but paid out tax free, paid out quarterly, and it's a tax free return. The annual payout looks like somewhere close to between 78 or 75 to 85,000, which will surely, once these are going to invest, you'll be able to see the cash flows for the next 5 years in advance before you invest. It's tax efficient, structured via SPV distribution. Well, I'll just put across one smart thing: invest smart, invest real. SMEs are redefining the fixed income segment because it is backed by real assets, governed by SEBI, and built by India's next gen investors. Well, I'm happy to say that everyone knows over here. Just for the new people, HBITS have already got a nod to launch its first SM REITs, and we got the approval on 1st of April 2025. And here's a very quote which has actually got very viral on all the places of Mr. Samir Bhandari, where it's been mentioned REITs and SM REITs are not just commercial real estate assets, they are about democratizing access to institutional grade wealth creation. So here I just want to put across this particular point, and we'll just start with the Q&A, and feel free to ask us any kind of questions as of now. Uh, More than glad to answer. So I have a question from Mr. Rishabh Gulati. When can we expect assets for subscription, which is IPO? So you have two questions. Let me just answer this first. So we are in the lines of signing our first structure, and we foresee that the first IPO or the structure might come with somewhere mid to maximum mid of January. That's what our expectations are. The rentals, the second question Mr. Gulati has happened to ask is the rental proceeds will be credited in DMAT, trading account, or directly to bank account. Do we have any future offering in existing fractional properties via SMEs? So just talk about it will be surely directly transferred to your bank account because how your dividends used to come, that's how the fluctuation talking about here is return of capital into your accounts. Do we have any future offering existing fractional ownership properties via SM REITs? Not actually, but could be a possibility once we migrate the current fractional ownership assets into the SM REIT section. Any points you want to add in, Mr. Smith?
Just to add, so as per SEBI, they are not encouraging new fractional properties as such.
Correct.
They want to put everything in SM REITs. And as we know, SM REITs, they mentioned that the minimum has to be 50 crores and maximum can be 500 crores. So most of our newer properties probably will be between 200 and 500 crores. And the existing properties, as Abhimanyu mentioned, we will at some point in time migrate them to SM REITs also.
Okay. So I have a question from Mr. Saurabh Prasad. What is the difference between SM REITs versus other REITs which were listed in the stock exchange? Well, we all know that there are around 5 REITs listed on the exchange, and of course, the fifth one was recently launched by Knowledge Reality, Satwa. So, just to give you a comparison, which Samir just mentioned, SM REITs is starting from 50 crores to 500 crores, and REITs is from 500 crores to 5,000 crores, or I should say beyond. In both the classes, if I look at in SM REITs, it's single assets, could be multiple tenants, but it's single asset with group of customers. In REITs, it is could be any kind of property. It could be under construction, it could be residential, it could be commercial. So it's group of assets with group of customers. These are two major differences if we talk about in terms to SM REITs and REITs. Third point, which is of course very important, where if you read about REITs, is that in SM REITs we are not allowed to have any related party transaction. In SM REITs, no related party transaction. In REITs, they are allowed to have. In SM REITs, we are not allowed to pick up any under construction property. In REITs, there is a 20% cap over there where the under construction properties can be picked up. Hence, that's a kind of a scenario. Yes, there is one more point which I could think about is in REITs, the leverage option is available. In SM REITs, leverage option is as well available. But as of now, we don't want to look at the leverage and we're looking forward to just go all particularly in terms to giving the returns to the clients and no leverage option to be picked up. Uh, Second point, what is the difference between SM REITs versus fraction ownership provided by admits only? Well, we were erstwhile fraction ownership. Now we are only looking at SM REITs. The portfolio which was fraction ownership will be soon and look forward after our first IPO to be migrated to SM REITs. So fraction ownership was basically run, it was unregulated to talk about the most important one. And SM REITs is of course regulated by SEBI. In fraction ownership, it was a simple thing that one could log in and understand and the credits, and it was, of course, liquidable. But once if someone has to reach out to me and they want to exit, it might take around 30 to 45 days. In SM REITs, since it's listed on the exchange, BSE or NSE, you can go over there and as per your choice, looking at the NAV currently standing and your objective, you can exit. So the liquidity is very clear. It's more transparent. It's much more it's regulated. So these are one of the major options which you will look at as a difference. Mr. Subramanian Chandrasekhar happened to ask, can you explain how the rental is tax free? If I invest in a normal property, the proceeds are taxable. Samir, if you can just highlight on this.
Of course. So the way, Subramaniam, we are structuring this transaction is it's going to be a return of capital. So assuming you invest 100 rupees and you get 8 rupees as rental, every year your capital value continues to go down. So the first year it becomes 92. After 5 years, it becomes 60. So this is going to be treated in your books where your capital goes down. So rental will now not be taxable since it's shown as return of capital. When you sell your units or when we sell the asset, the difference between the price and that reduced capital value will be treated as long-term capital gain. So assuming your reduced capital is 60 and you sell it for 120, on 60 you will be paying 12.5% long-term capital gain. And we'll have notes from E&Y, which as and when we launch, these will be circulated to you. AB, you are on mute.
My bad. Sorry. So question from Mr. Satish. Capital appreciation will be on net investment of ticket size or the amount remaining after returns of. So it will be on the net investment of whatever investment you make. That's going to be the investment. So question from Mr. Dilip. Can you share people to join late? Of course, at the end of this day, after a few edits, we'll be sharing this presentation to everyone. And it will be available on our YouTube channel. So please feel free to log into our website, which is hbits.co, and have a visit that. And we will as well share you this presentation. So question from Mr. Saurabh Prasad. How the rental income is tax-free under which section of income tax? Well, already answered by Mr. Sameer, but just to let you know, while we file in our DRHP, which will be viewable to everyone, and when you are looking forward to invest, our taxation partner is E&Y. You'll be able to see that how the taxation will take care by giving you much more tax efficient yields in returns, and you'll come to know about that. And it is basically return on capital, return of capital. Once allotted, how the units will be allotted and traded, how the units be deducted. So let me answer this question first. Well, moment it is allotted, it will be showing in your demat account, and you can of course trade since it will be listed on the exchange BSE or NSE. Another question which I have, how the units will be deducted once the rental income is paid? Is it somewhere similar to SWP? Well, just to talk about in regards to once the payout is done, the capital value surely goes down. It is not adjusted with your rental, but it is adjusted towards your capital. So, any input you want to give, Mr. Samir? Yes.
No, so in this case, I guess we are still working with the authorities on how the units are going to trade. But I actually don't see the units reducing as such, because this is more going to be in your balance sheet how you actually show it. Case in point being, though we are showing it as return of capital, it does not mean that the value of the property is going down. The value of the property remains the same, or it actually continues to go up. So it's how we are showing as more in accounting. But obviously we'll have more and more clarifications as and when we file the DRHP.
Right. Question for Mr. Dinesh. Could you please take an example of one investor and take us through journey, steps, points to note, investment, earnings and taxes, and then sell off and taxes? Well, the entire journey, of course, is just to understand while we, it's as per the IPO, it will be released. You'll be able to see the key information document of the particular IPO and the standard information document, which will help you to see the cash flows which will get the next 5 years. You'll be able to see the property. You'll be able to see the tenant. You'll be able to see the cash flows, the taxation, and each and everything. Looking at that, you can avail and to apply in the IPO. Moment the IPO is listed within 3 days or a 5 day time frame, post that the allocation is allotted into your DMAT, and after that, it is kind of tradable on the market and sell off and tax. So that's the overall structure. But yes, everything will be it showed with you in advance at this moment. Mr. Lakshit Bhatia, have you asked, what's your criteria of choosing property besides income? What's the cost of capex and open in the building? Well, we currently see that looking at the current micro markets, which is Pune, Ahmedabad, Mumbai, Bangalore, Delhi NCR. These are some locations where the properties are looking to be looked at, and there are certain parameters like vacancy percentage, the kind of supply, the entry price point. It should be a good tenant, the longevity of the tenant, the quality of the tenant. It should be a grade A property. It should be a grade tenant. The lock-in period. There are a lot of factors which comes to understanding, and then we, as you see that in one of our earlier slides, we mentioned by evaluating 50,000 crores worth of properties, we did approximately 500, 600 crores of assets in fractionation. So that's the kind of how we look at and evaluate. Well, Mr. Weber Pandey Dubey happens to ask, the initial investment of 10 lakh is high. Is it traded on DMAT compared to stocks, which are financially manageable? Any reason for the high initial investment? Well, I would surely mention, Mr. Webb, that yes, what we look at, it's kind of a trend which is going to be followed. Erstwhile in fractionally, we were looking out for investments which were 25 lakhs and 30 lakhs. Now it has become SEBI regulated. We are looking at 10 lakhs. And I see that, and of course, Samir can second me, that we can surely look forward that from a year or two from now, this value of 10 lakhs can go down as low as 1 lakh. Correct me if I'm Samir.
Yeah, so Vaibhav, honestly, I totally agree. We also want this investment obviously to be much, much lower. So now this has basically been indicated by SEBI. They definitely want to democratize this further, and they want to open it to retail, right? And that's really the objective. So my guess is 18 months, 10 lakhs comes to one. In 3 or 4 years, it probably comes down to 10,000 or 20,000 rupees. So it's definitely going to continue to come down. As what happened, in mutual funds, what happens to REITs, this is definitely going to happen. I think it's just a matter of time.
Right. So Mr. Kumar Gaurav, what are the returns of SM REIT versus REIT? This is the question which I'll just pass on to Samir.
Sure. So Kumar, if you look at, let me talk first about SM REIT and then I'll talk about REIT. SM REIT, you get returns, rental returns of around 8 to 9%. So let's take the case of say 8.5. And then capital appreciation, roughly you can expect, no promises, but around 5.5 to 6%. So IRRs which we typically look at is anything between 14 and 17%. In the REITs, because they also have under construction assets and they actually also take leverage, typically the yield which you get on a quarterly basis is closer to 6%. So it's almost 150 to 200 basis points lower than SM REITs. And they really don't look to sell these assets. They typically hold these assets for a long time. So there the IRRs are more like 12 to 13%, whereas our IRRs are between 14 and 17%.
Right. So the next question which we have is from Mr. Ashish Kumar. So please clarify which part of payout tax-free and which part taxable, which examples along frequency or percentage age of payout and wholesome except long-term growth. So let me just give you one quick example. Of course, we have already mentioned about this earlier, but just to give a little match to it, taking into consideration, let's say a property is worth 100 rupees, okay, and the coupon rate is 9%, 9, and it's a payout which comes. And at the end of 5 years, I sell that property, 100 rupee property at 150 rupees. As a comparison, let's say erstwhile, what we were doing, 9 rupees paid out, it was a full tax reduction, 30%, and 100 rupees sold at 150. So on 50 rupees appreciation, there was a 12.5% of long-term capital gain tax. So with that kind of effect, putting in the right numbers in the Excel sheet, it was coming as approximately 176 rupees 35 paisa. Whereas in the current scenario in SM REITs, if I talk about 100 rupees as a base amount, 9 rupees going out as a tax-free income to you, that 100 rupees becomes 91, and so on for 5 years. So your base capital value, 100 rupees goes to 55, and let's say it gets sold at 150. So 150 minus 55.
55.
So
Yeah.
55. On the balance amount, you charge on LTCG. So cutting the story short, in this particular thing, the value was coming approximately 182 rupees 30 paise. It was a good tax efficient, good way to look at, and it was growth of by just approximately 7 rupees 65 paisa. That is approximately 7.65%, and it is just on 100 rupees which we are talking about right now.
And I guess,
And
Ashish, just to add on that, effectively what you're doing is effectively your tax firstly is being postponed because you can use that money for 4 5 years till you actually either exit your units or we sell the property. So that's one. So that's time value of money. And when you sell on, even when your capital is reduced, you're paying long-term capital gain of 12 and a half as compared to income where you would have typically, if you were in the highest tax bracket, you would pay upwards of 30%. So it's a combination of these two benefits.
so I have a question from Mr. Sharad Sharma. What's the minimum investment for SMBs? 10 lakh rupees. Question from Mr. Vaibhav Dubey. Query on flexibility. If HBIT decides to sell stakes in property, would the investors get the values? Question is that the investors did not plan to redeem their stake but are forced to. How should we understand this particular point? So, looking at this particular thing, at this moment, if I talk about, we don't sell partially any kind of a stake. Okay. Uh, there are two kind of exits one could look at. Your money is listed on the exchange, either on BSE or NSE, on which we have to submit the valuation report to the SEBI, and you can look at the particular NAV. So you can choose to exit. Second part is that as per the analysis and cycle, let's say after 5 years, you have to exit the entire property. And our main motto and objective is to surely deliver you the best of IRRs. Right? That's a kind of return which you want to pass it back to you. So it's not about forcing, but it is surely giving you to give the best of returns and to give you the best example to talk about. Anything you want to add, Sunil?
So here again, Vaibhav, obviously the NAV is going to be published on a yearly basis. So as per SEBI regulations, we have to give the NAV to the exchange. So you will know how the prices are moving up as per the net asset value. Our objective would be to try and see if we can get even better than the or higher than the net asset value, so that investors are happy about it. So though we may not have to take approval of the investors, but the objective is to be maximize the returns for our investors.
Exactly. So I have a question from Niladri Saha. How much the rental appreciation I can expect yearly? Well, rental is what we can look in current scenario is either it's basically 5% annually or it is like a 15% every 3 years. That's a rental appreciation. If you're talking about capital appreciation, it's purely on the same lines as on the cap rate. But on the purely on the rentals, it's 5% yearly or 15% every 3 years. It as well depends on project to project and the particular rental agreement, which will be shown to you in advance before you invest. Question from Mr. Rishabh Gulati: Is uh, asset will be acquired post IPO subscription or pre-acquired? Well, it's surely going to be acquired post IPO subscription because we like to follow that, but it is mandated by the seller that it is locked in with us till we happen to do that because it's basically going to be holded by a trust. The IPO comes in, we raise the money, we register the property, your units are allotted into your DMAT and tradable, and you start getting your rental income. Let me again clarify this point. We deal and only with pre-lease commercial assets. So these are ready properties getting you yields from day one. So they are going to be there available for you once it's going to be demandatory. Mr. Rahul Mundara happened to ask, since you would be giving rental in form of return of capital, would the tax department look at the government valuation of the property? And if the property value is finally, if it goes below the market government value, in that case, what it track tax? A to talk about, well, we will be surely publishing the ENY tax structure, okay, which is there. We will be submitting to part of one of your question is that we will be submitting the valuation report every year, which will change the NAV values over there. I don't foresee that it will go down because that's how the professionals, why it is professional managed. We need to look at the right entry price point discounted to looking at the current circle rates, and that's how we look at. If it is go below the market value, in that case, would it attract tax? I doubt. So we are only focusing on which is going to be done on the long-term capital gain tax for you. That's the main motive, and we want to deliver you this particular appreciation. Well, just to give you a point, it as well helps me with this particular two data points to give you. We at 8bits have given successfully two exits in the past, wherein in the first exit, the brochure had mentioned targeted IRR to be 14.54, sorry, 15.54, and we had delivered 17.54. This was done in the exit in the year 2021. And there was a second exit which we did earlier this year, in which the targeted IRR mentioned on the brochure was 13.10, and we have delivered 14.74. So it surely want to showcase that we kind of acquire the property looking at certain analysis, which helps you to get the best of returns. There is another question. What will be the capital appreciation calculation for existing fractional properties? Well, existing fractional properties is that, again, we are looking forward to do the valuation of the properties every year. It will be, you can reach out to your investment managers. And I guess the next post valuation which you're looking at is the month of January. If for each and every property which we have over there, around 12 to 14 properties, we look forward to exit another 2 to maximum 5 years as per the horizon.
I guess the question is, what will be the tax? I think that that word has been avoided, word has been missed out. The tax for capital appreciation for existing properties will be at 12.5% long-term capital, which is applicable to every property. In existing fractional properties, your capital is at 100, and at whatever you sell, you pay the difference on the tax.
Right. Okay, understandable. Every year, if you're giving 8% of the invested value and showing as the capital given, so after 12.5 years, the capital is zero. And then after 12.5 years, how would you? So got the question, sir, and it surely makes sense. And we did the maths as well. So predominantly, what we are looking at is that we're looking forward to give you, though the asset is there for perpetuity, but our idea is to deliver you IRRs as well. So looking at the particular cycles, we look forward to do an exit of the property any time between 3 to 6 years. So 12 years is of course a longer duration, longer time, but that's what we foresee between 3 to 6 years, if not maximum 8 years. That's what the idea is. Hence, that question will take care of this particular. So question from Mr. Vaibhav Sharma. Any provisions, plans of monitoring approximate capital appreciation of each assets on a yearly or 2 yearly basis and keeping investors updated? Of course, as I mentioned, that will be updating customers and of course, it is a SEBI regulation. We have to submit the valuation of the property every year, which will change the NAVs over there. If it is in concerns to the current fraction ownership, again, every January we will be doing that. The second question by Mr. Vaibhav Sharma is any portal access where the current properties which are not transferred to SME yet are listed for resale. If anyone want to buy, sell, and please reach out to our investment managers. Okay, we would be having. We always have a waiting list for the people who want to buy resale properties. But please make it a point that with the current SEBI norm, you need to have a demat account and it will be traded only electronically. That is demat to demat. So if you have a demat account, then only you'll be able to buy a new or the existing fractional ownership property. Question from Mr. Raghuram. Is payout to the investor is fixed? Well, in terms of the payout to the investor, yes, it will be shown as a cash flow for the next 5 years, paid out quarterly in the when you before you invest into that portfolio. So it will be going to be not. Not going to be talking about fixed because there is an effect of rental escalation, right? So if I talk about, there will be two parameters mentioned over there: rental yield and average rental yield. So it could be a rental yield of that particular year, and if it is for let's say 6 years, so every 3 years there is a rental escalation, or every year there is a rental escalation. You'll come to know about that particular effect in advance. Question: the market experts do not advise on SM REITs yet. Any reasons? Well, we are still in a stage to start. Uh, or I should say, I should leave this question with Samir. And of course, I have a lot to say on this, but let it come from Samir.
Yeah, so Weber, it's effectively there's only been two properties which have been listed as SM REITs. We'll probably be the third one to list it. So it's a new asset class, I guess, which has come up. In fact, a lot of people, a lot of market experts don't even know about it. I'll be very honest. And that's one of the reasons we've been educating a lot of our clients. A lot of the market experts know about REITs, but REITs is more of an institutional investor play, whereas SM REITs is more for retail and high net worth individuals. So I think as it gains traction, as more SM REITs come to the market in terms of IPOs, I'm sure these guys will then be talking about it. So it's all a question of educating the people now.
Perfectly right. So we probably yesterday we had a meet with around 50 people. And I guess for every person, though they were part of the market, they were not aware. And of course, but there were two people out of that. They came out as an investor and it was educated. And now we actually have a high call volume today. This is a question from Mr. Satish. When the benefit of increase in rental will be shared with the investors as well? Of course, as I mentioned, when you invest into a particular scheme, as I mentioned, we are surely going to come. It will show the cash flows of the next 5 years in advance to you. It will show the rental escalations. Hence, it's going to be very transparent, and we want to follow that particular perspective that everything is shared with you in advance. Liradri Saha, can I invest in SM REITs before IPO? Well, we are currently working out on a structure. Can't commit right now. Let's see how it could be worked out. But as of now, when we talk about our first IPO coming in, could be anytime end of December till mid of January. We look forward that we will be surely having more webinars during that time, somewhere November and December early, where we can talk about how it can be invested. As of now, can't say, but please surely reach out to your investment manager and be in touch. and will, of course, be a part of the webinars. Lakshit Bhatia, what is benefits and share of Edward? Is there any other outside company Edward which would give um,
Commissions.
commissions? So I didn't understand actually the question
No,
properly.
so let me answer that question.
Please.
Effectively, you're saying whether HBITS would be giving fees for this. So obviously, we'll work with merchant bankers who obviously will be given fees. And depending on if there are other financial planners who come with large anchor orders, we could definitely work on that. But so far, we haven't really decided anything, and it will be decided closer to the date of the IPO.
Right. So what is longest possible duration for which I can hold SME's share starting from IPO? Well, again, depends on asset to asset. In SM REIT kind of a product, uh, it's all project specific because we deal into pre-lease commercial property. So it could be a commercial office, it could be a 6 year duration, it could be 9 year duration, it could be a hospital, school, where it could be a 15-year scenario. But as of now, if I have to focus on the current IPO which is coming, you can look at somewhere around a 3 to 5 year kind of a lookout, or 3 to 6 years, where you can be there for that particular duration.
Sorry,
So,
Abhimanyu, what Dinesh I think meant that how long can he hold it? Dinesh,
so
you
yeah,
can hold it as long as you want. If we as an asset manager continue to hold it, you can continue to hold it. Or if you want to exit anytime, obviously it's listed on the exchange, so you can exit.
right. So Mr. Kumar Gaurav, property option has launched two SMBs. They had a unit price bracket of 10 lakhs to 10.5 lakhs. Both the IPOs were allocated at a higher price range. I understand that the number of units calculated by NAV of the property 10 lakhs. If the allocation happens to 10.5, who gets the benefit of that extra? Totally the customer. It purely goes to the customer from day one. And next question is anonymous. So how SM REITs will be traded units or NAV? Well, those units will be, one unit is a value of 10 lakhs. That is being going to be allotted into your DMAT when you invest. And the NAV value will be surely mentioned as per that particular lot. So it will be traded as per the particular unit versus the value. Like how you handle number of shares with the stock price, exactly NAV and the number of units. Let's
I
talk
guess
about.
just to go back to Kumar's question, AB, I think what he meant was since it was issued at 10.5 lakhs, who gets that extra benefit? So I don't know how PropShare has treated it, Gaurav, but we would try to issue it as close to par as possible so that the investor does not lose out anything.
Okay. Uh, Sumapi, the different is it different? How different it is from SM REITs already listed? Well, it's
So
not
Uma, it's basically going to be the similar to what is listed, but obviously
exactly
the properties are going to be different, the tenants are going to be different, the asset manager is going to be different. It's like REITs, right? You have Embassy REIT, you have Mindspace, you have Satwa. So different players who will have their SM REITs. And I guess the key question, Suma, here is to make sure that you have access to the founders, access to the asset managers, make sure you believe in the asset managers and their expertise.
question from Sharad. Do you share leave and license agreements signed with the tenant before launching the IPO? Of course, we can surely share as we want to be transparent and clear. And I guess it should be a part of the key information document. And while you look into invest with us, please be in touch with investment managers here. And of course, we'll be more than happy doing that. Dinesh Kumar, thanks for answering. Well, I'd like to just as well, ask Samir in regards to the
I think
current.
Madhu's just asked one question.
Sure.
So what are HV's future plan next 2 to 3 years? Do you have any warehouse grade A property planned for listing? I believe there's a high yield dividend with good capital appreciation from this and would be interested. So Madhu, we plan to issue roughly next. So up to March, we are trying to issue 750 to 1,000 crores. Next year, we are planning to try and do 2,000, 2,500 crores. And this should be a combination of commercial properties, warehouses, maybe if we get a good hospital, also, or some lab, we would do that. Warehouse, the bigger problem so far has been the rental yields are very low. So you're not able to get the 8% yields, you get much below 7%. And that's what on the warehouse part we've been struggling with, because we cannot obviously take under construction, right? We've got to take all ready warehouse. But absolutely, warehouses are going to be on the anvil, and we will definitely be looking at that and will be interested. Sorry, over to you,
Yes.
AB.
So Mrs. Sharath happened to ask, what is the payout frequency in SM REITs and REITs? Well, SM REITs will be paid out quarterly, as we mentioned, and in REITs is of course indicative, and over there it could be biannually, quarterly, depending on the particular payout indicative by that particular REIT, and which is published every quarter. Mr. Harish Zawari, my HUF has equity portfolio. In case I encash present portfolio and invest in HBITs, how long-term capital gain be income taxed?
I guess it should be taxed at the long-term capital gain for
Mhm.
HUF. Unfortunately, I'm not an expert on HUFs, but I guess you'll have to just pay long-term capital gain on your portfolio.
Well, yes, it will be. So HUF is any individual body, non-individual body or individual body where the investment is there. And I'm sure that you have an HUF demat account. In that particular person, if you exit or in cash, what are the profits you make? You have to surely book as long-term capital gain tax or short-term capital if it is less than 1 year. So, Mafi, how investors will be protected by situations like okay, startup comes, definitely it will impact the liquidity in market and retail investors may get stuck. Well, this question is, I like Sameer to just comment on this because ideally we don't see any kind of thing happening like that, which happened to the other organization because I don't see that the product, there was a problem with the product. It was more towards how the operations were made, and that's how the problem was. Well, at AgeBit, so Sameer, over to you if you can just.
Yeah. So Suma, that's actually a good question. So in our case, with SM REITs, right, as you know, we are regulated by SEBI. So it's going to be listed on the exchange. So listing obviously gives you the liquidity so that you can sell your units anytime. So what happened with Strata was unfortunate, but it's very specific to that company, and it was more governance than anything else. Don't foresee that happening, and with SM REITs, that issue at least will not be there since SEBI will be a regulator.
Right. Thanks, Sameer. Mr. Venkata Gupta having asked, what are the upcoming projects from you and where can we find them? How we can know the exact details of investors of these properties? Well, in terms to upcoming projects, as you know, we mentioned that uh, that's our plan year-on-year growth. Currently, the next opportunity which we are looking forward to finalize could be anything between Mumbai, Pune, or Bangalore. We have a strong pipeline of close to 3,000 crores and looking forward to have around 3 or 4 IPOs back to back. So that's the idea. In terms to how we, the exact details of investors on these properties. Well, of course, if it is under the guidelines, you'll automatically come to know as the details of the investors. When capital appreciation is taxed and units, how the calculation will be done? Well, the capital appreciation will be only taxed on the long-term capital gain tax uh, at the end when you exit, and that's how it's going to be done. So it's only going to be on a difference of the current value of the property you hold to the property you sell. So only on that particular is the LTCG. Uh, Suma, yes, but handshakes are less market. Yeah, but if handshakes are less in the market, getting exit will be a problem, isn't? Well, in terms of this, the liquidity, if you look at, primarily this product is a long-term investment product. So people tend to invest into properties because this asset is property. Not every property can go up overnight. So 3 to 5 years or 3 to 7 years is the kind of horizon one should look at. But handshake, when you talk about liquidity, currently the liquidity available in the market is somewhere close to 1.5 or 2 crores, maybe 2.5 crores. But that's the kind of thing which is available. So I can give you one example. We just had one of the questions earlier for one of the SMEs which was currently running, and there was a small availability of these unit. So I had around group of around 15 clients who tried to apply for that, and there were only two clients who were lucky to receive it. So liquidity is there, you know, but currently still people are looking forward to sell in SMEs. So I don't think there will be a problem in that. But even if it is, I guess as we said, we are doing education. And people are more the market increases, automatically there'll be more liquidity. Srinivas M, if SM REITs IPO gets oversubscribed multiple times, like 25x or 50x, how will be allocation units be done on applicants? Well, from one side of it, I'll say thank you. Okay. On the other side of it, but my its main motto that every individual who invested with us should be allotted. So as I mentioned, we would be looking forward for something like some way to that everyone gets allotted, but of course to the value of the particular property. So please stay in touch with our investment managers, pre-IPO, post-IPO, whatever it is, and we can try to see how it can be done. But it is, of course, a lottery system at the end of the day. At the end, as we know, we talked about prop share, it was 6x for the retail customers, and that's how it was allocated. Question from Sridhar Reddy. After you exit, consider 5 years in an asset. How can we continue to get rental continuously? If I want to continue with SM REIT journey without any break. See, Sridhar, one thing is there, like there's something like timing the market or knowing the market, and we at professional uh, AMCO players, we like to give you the best of them. That's going to be our main motto. To give you an example, let's say we had one particular property which is into fraction ownership, uh, where the tenant was, let's say, tenant A, where the rental escalation was 12.5% rental escalation every 3 years. That particular property we like to exit probably in the seventh year, where the second escalation kicks in and automatically the base price as well goes up. So it's not about just holding on to the property, but it is idea is to give you the regular returns. Well, I'm sure when we are looking forward to give you an exit, there will be an upcoming IPO where you can further place your investment and surely book your profit and further invest with us further. Well, adding to this point, I'd like to ask one question to Samir. Samir, in regards to the commercial real estate market, we see data centers, some norms have come. We see, tier one cities getting most of supply. Hyderabad, one of the sections over there. As you have just traveled recently a lot, almost each and every location, what do you foresee the Indian market and point to uh, I'm being very optimist, but I'm not being super optimist. When do you think India can reach to a developed stage?
So first, first question, I see commercial real estate demand just going through the roof as more and more GCCs set up offices. With this whole H-1B issue in the US, there's more and more people who are actually going to set up offices in India. Data centers, as you know, I think the AI space is just exploding. So that's going to happen. So just around the office space, data centers, warehouses, I think sky's the limit. So definitely it's in very, very good hands. About India as a developing country moving towards developed stage, I guess the key thing is going to be the infrastructure development, which Prime Minister Modi has been concentrating on. As you know, he inaugurated the new international airport, and all these things actually will add to uh, India's aura, right, or becoming a more and more of a developed country. We obviously have a very large English speaking population. We have a very highly educated class. So definitely we have all the right ingredients. I think the question is the infrastructure, which I think this government has been truly focused on. And finally, I would say I think we have an extremely good RBI governor a person who understands economy, who understands the global headwinds. So I think RBI as a central bank is one of the best central banks in the world, I think. So I think that's obviously giving us tailwinds to become a developed country very soon.
Perfect. So I have a question from Mr. Srinivas. Oh, when will the existing HBH fractional ownership assets be migrated to SMBs and those units get listed on individual DMAT? Is there a timeline for the same? Well, of course, we did cover this particular thing, but yeah, just to let you know, Mr. Srinivas, we look forward to do that, and our intention is surely to do that. But at this moment, there is a kind of some checks and things is going to be done since the product is new for SEBI. Hence, migration should happen, or we'll be taking a reconsent from all the shareholders of the particular SV somewhere again in the month of January, post our IPO. Sharat Atre, when you sell the SPV or an asset after 3 to 6 years, would you require 75% voting rights from the investors? Well, in SM REITs, no, because it has been managed by professional and as per the SEBI governance and SEBI norms. Hence, over there, you don't require because the shareholding pattern is not limited to only 100 or 125 shareholders. The value of amount of people, it goes way beyond much numbers. So it becomes very difficult to do an exit at that point. Hence, looking at SEBI there, audited properly, that time we don't require any kind of a voting rights for the same. Well, any other input which you want to give, Samir, before we sign off for
No,
today?
I think this has been a great session. We will continue to do these educational webinars. If you have any personal question, do reach out to me or Abhimanyu. These webinars will be on YouTube. These will be listed on our website. And we look forward to interacting with you regularly. Thank you. Thank you so much for joining the webinar.
Sure. And we like you to, if please follow us on LinkedIn and Insta. And if you are not part of our EdgeBits YouTube or WhatsApp channel, please you can reach out to the investment managers because we just give a on-time update over there for any kind of information news. So looking forward to see you in our next webinar, which is going to be on 30th of October with a different topic altogether. And the registration link will be available on the website. Thank you very much. Wishing you guys, everyone over here, a very happy Diwali in advance. Thank you very much.
Thank you. Thank you so much. Bye.
Thank you. Bye.